because fourth quarter revenue came in at $1.56 billion, beating estimates ever so slightly. And then first quarter revenue coming in, C's first quarter revenue rather, from at $1.33 billion to $1.36 billion. The estimate was for $1.33 billion. This is a company where I feel like every quarter the stock moves double digits one way or another after earnings. What are your immediate thoughts?
I mean, look, when you look at Alphabet, they are adding, almost $4 or $5 billion in ad revenue, search ad revenue every quarter. You look at Snap, it's a $1.5 billion quarter. And so when you compare it that way, the absolute numbers, I mean, their growth is nothing to talk about. Yes, the bar was really low and they, beat the consensus numbers. But in terms of the actual ad dollars, this just shows that Alphabet, when you compare, search and YouTube, they are still getting a lot of the incremental ad dollars.
How do you compare Google Cloud versus, we're going to hear from Amazon, obviously, and then we've heard from Microsoft. So, put that against them and what we're hearing from Alphabet or Google. Like, how do you square that?
When you look at Microsoft Azure, clearly it's a $70 billion business growing at 30%. Google Cloud is more $50 billion run rate, close to that, growing at mid 35%, but that growth seems to have come down. And when you look at Amazon Cloud, it's north of $100 billion, growing at high teens. So clearly, everyone had their kind of swim lanes in terms of the expectations and what kind of growth number they're supposed to show. But in this case, the fact that there was a slight miss kind of puts that logic into question. I still think, it comes down to the compute availability and NVIDIA GPUs not being available that quarter. And the fact that they're raising the CapEx is a sign that they believe the cloud business will continue to grow.
So if you'd seen a retrenchment in CapEx, you would have said, wait a minute, there's something happening, potentially.
And they don't want to miss out on that because this is the market where cloud businesses will really accelerate. Even with the DeepSeek efficiency and everything that has been talked about, Google should be the best position. Like I said, they have their own TPUs. They should be able to benefit from the efficiency. And so that should translate into faster cloud growth. If that's not the case, I expect this sort of reaction, and maybe that will be the case tomorrow.
Great stuff. Listen, we're going to be following all of your reporting and research throughout the evening. So Mandeep, thank you so much. Mandeep Singh, Senior Tech Industry Analyst here at Bloomberg Intelligence. We are not done with Alphabet.
Well, let's bring in Caroline Hyde, the co-host of Bloomberg Technology on Bloomberg TV. Just to recap, everybody, Google's revenue in its search advertising and YouTube business was better than forecast. But it looks like traders are focused on that Google Cloud revenue number. It was 1.9% below the consensus forecast. Google Cloud operating income was a 2.7% beat at $2.1 billion, up from $864 million a year earlier. Caroline, why the stock slide? Mandeep made the point of YouTube, YouTube specifically subscriptions. What are you looking at?
I think it is, to your point, cloud, the CapEx that's being spent on cloud. But ultimately, remember, this is exactly what happened to Microsoft. Microsoft beat on its fiscal quarter. But the fact that we saw a 1 percentage point drop quarter on quarter in terms of revenue growth from the cloud Azure business was enough to wipe out all of those gains from actually the beat across the revenue and overall profitability. So I think, again, it's why are you not delivering on the growth area? Why are you seeing 30% increase in Google Cloud revenues rather than the higher anticipation? And I wonder if, to Mandeep's point, it will be because they were limited in scale. The supply side is the issue here, not the demand side.
Well, and they did say AI-powered Google Cloud portfolio, has stronger demand. So they're kind of putting that out. It almost feels like you want some clarification about, okay, so give us a little bit more color about what's going on here.
And this is why the calls have been so important. Remember we sat here and Apple's numbers came out, stock dropped, then suddenly Tim Cook comes on, all buoyant. Meta does the same. They were incredibly late. Their numbers did miss on a forward-looking forecast, but again, they came on and talked so optimistically about the opportunity. If Sundar Pichai gets it right and says, look, we're still just ultimately limited on our capacity thus far, but bear with us, we're investing big time. We have got the one-stop shop for vertically integrated generative AI. We are making the large language model. We're making our chips. We're providing it, and it's making our search product still so fabulous. He has an ability to navigate some of the thornier questions around antitrust, around China and geopolitics.
Hey, look, Amazon shares reached a new record today. But after hours, they're down about 1.4%. Kind of a knee-jerk reaction in sympathy with what we heard from Alphabet. Does today's report tell us anything about what we'll hear from Amazon on Thursday when it comes to the cloud?
I mean, who knows whether some of the slowdown in Google is an opportunity for Amazon, who had bigger scale in data centers. But again, we've heard from Matt Garman over at AWS before, talking of this need to get the NVIDIA chips. And perhaps so that these delays that you've had to Blackwell, for example, and the rollout has been a supply side thorn in the side for a lot of these businesses. And that's why they're turning to their own chip designs, and why Broadcom is on the upside, because maybe with bigger CapEx from Alphabet, it's going to yet again be winning out in terms of business, as companies like cloud providers want to depend on their own supply side too. I think there's going to be a knee-jerk reaction, as you say, but Amazon's got a very different business model in terms of advertising as well.
Caroline, I have to roll some other things in. First of all, let's remind everybody that shares of Alphabet are down about 6.25% here in the aftermarket. So they've kind of settled at this level, and assume as soon as the call comes, we could see some movement in the stock once again. But it's coming on a day where U.S.-China tariffs against one another. China's retaliatory actions included launching an antitrust investigation to Google.
Extraordinary.
And then just earlier, we had Alphabet come out and say Google's removed a passage from its AI principles that pledged to avoid using the technology in potentially harmful applications such as weapons. There's just so much here to unpack. First of all, the retaliatory actions by China.
Yeah.
And how are you kind of rolling that? Is that just...
I mean, the stock ended the day at a record high. So people really felt that, yes, this is an Android issue, most largely, but this is the game of tit for tat, and ultimately it's not going to affect their business model too much in the longer term. So I think you're right, though, to fold in maybe the Palantir element of all of this. Look, that has been the software bet for generative AI over the last year, and they are all around defense, around the focus on generative AI and what it can do for government. And it has been a limitation in the past for Alphabet and Google, but people like the upstarts, the Andurils coming in here being like, you need to be okay with making this sort of generative AI innovation.
Before we let you go, AMD is out with results. Shares in the after hours are higher by about 3.4%. The company sees first quarter revenue coming in at $6.8 billion to $7.4 billion. Shares climbing as first quarter sales view tops estimates at midpoint. Your knee-jerk reaction to AMD?
A relief. They needed to assure their investor base. Lisa Su has been under a lot of duress because data center server provision, ultimately AI accelerators, have not been able to match the prowess of NVIDIA. Everyone feeling, in fact, there have been analyst after analyst downgrading the stock, worrying that they just aren't there when it comes to a real competitor. But the fact that she's able to deliver in margins, the fact that she's still saying, like, I'm focused on R&D and expenses coming in perhaps a little bit higher there, but they need R&D. They need to focus on the AI accelerator because they're being really tough competition in the world of PC and other. And remember, you and I aren't buying PCs as much as we used to.
Yeah, stock's up about 2% here in the aftermarket. You know, going back, well, what would be your top question on the call for AMD? First, let's go there.
I think it has to be, what market share are you winning from NVIDIA? And are you building out there? Is that the area you're committed to? That's going to be the reassuring element. Probably the second question is, and what does geopolitics mean for all of that?
Yeah, it feels like that's a question, fair question. It's bouncing around to now, just up about 0.5% here. Same. Let's go to Alphabet. What would be your number one question here on the earnings call?
Why did cloud not live up to expectations? And I wonder if immediately they'll be like, supply side issues.
I was going to say, maybe they'll say this on the call today.
And that didn't help Satya. Like, to be honest, he fessed up to that, and the stock was down on the back of their numbers. So,
if it's out of their control, why doesn't it help?
Well, I suppose that it's like, well,
why didn't you invest more in CapEx? Is that the
why didn't you see this coming? Why haven't you been seeing generative AI coming for the past decade in the same way? I think there's a frustration, just that people, what, you mean you're missing out on this demand because you haven't got the supply side there? But when it all comes back to their chip providers and ultimately how quickly you can build a data center.
All right, great stuff. I mean, God, moving around. Caroline, thank you so much. Caroline Hyde, of course, co-host of Bloomberg Technology on Bloomberg TV. Catch her at 11 a.m. Wall Street time on Bloomberg Television. All right, folks, we are watching, as we said, we've got stocks bouncing around in the after hours. AMD down about 2.5% now, waiting for that call with Alphabet. It is down, let me just pull it up here, still down about 6.5%. So watching earnings, important ones. We'll bring you headlines as those calls start to cross. In the meantime, let's not forget, it's been a busy day out of Washington once again, and it was just about a half an hour or so ago that we were playing a playback from President Trump in the Oval Office.
Yeah, I got a little bit of news from that. President Donald Trump signing a directive that aims to ramp up economic pressure on Iran, following through on pledges to reverse what he has cast as a lax sanctions enforcement regime under his White House predecessor. For more, we go to Bloomberg Radio and TV political news director Jody Schneider, who joins us from our D.C. bureau. Jody, the playback, about 35 minutes of questions and answers from the Oval Office. Is the Iran headline the big headline?
Yeah, I think so. I mean, especially because the president is meeting with Prime Minister Netanyahu today from Israel. So this is a key geopolitical situation, and I think that and what he said about it is probably your big headline out of this, although there were some other interesting ones. We get a barrage of them now, Tim, as you know. But basically saying that they do want to ramp up this pressure on Iran, said they don't want to hurt Iran, but at the same time, and in a break, as he always does, from the previous administration and criticizing the previous administration, saying it's time now to get tough on that. He wants to make sure Iran does not have any nuclear weapons.
Jody, as you know, better than most, there's signing an executive order, or executive action, and then there is, actually cutting off Iran's oil exports or preventing the country from obtaining nuclear weapons. What real levers, or what's, the real ability of any president in the White House right now to really make those changes?
Yeah, as you note, he would have to make dramatic changes that would affect the world oil market and would affect the U.S. badly. And as we saw yesterday with tariffs, he threatened the tariffs, but then when it came down, the 25% on Mexico and Canada, but when it came down to it at the end, he was willing to put those off, at least for a month, and who knows, they may not take effect ever. Once he saw what the market reaction was going to be, he was willing to get something else from them to take those off. So this may be, the same kind of thing. He wants to put pressure on. He wants Iran to be an issue. But how willing is he going to be to do things that could affect consumers and the world markets negatively? He doesn't seem to want to do that.
I do wonder too, Jody, who does he need in terms of allies, be it in the Middle East or elsewhere, to help him in this, kind of mission?
Yeah, and we heard some of that too, Carol, in the presser, the playback, where he was meeting with reporters as he signed executive orders, that he wants Egypt to help them. He wants, he's asking for Egypt and Jordan to help take some of the Palestinians that he said he wants to see relocated. So he's looking to other countries to do this. He's reached out to Saudi Arabia. Clearly, he wants to partner with others and also, to shoulder some of the pressure.
Hey, Jody, I want to talk a little bit about the education department, because he was asked about that and spent a few minutes talking about education in the U.S. He reiterated his preference to dismantle the Department of Education during his second term, but he also indicated he preferred to build consensus around the idea rather than attempt the maneuver through executive fiat. Linda McMahon set to run the education department. What do we think is going to happen to education under this president?
Well, this is another one that he, that was foretold on the campaign trail. He kept saying the education department's not working. We need to do something else. And part of his strategy or philosophy, if you will, is always to turn things over to the states whenever possible. This will be difficult to do, to turn things over to the states, certainly without the funding they need. And a lot of the things the education department does are not K through 12. They're, things with student loans, they're colleges and universities and technical schools. So turning it over to states doesn't, you can't easily do that. But clearly this is on his list, and how he goes about this will be the question, as with so many things going forward. But with these executive orders, he's making the case in a lot of these instances of, hey, this is what I want to do, here's where I want to go. And then whether it's legal, whether you can get this done, whether you need Congress to help you, those are all questions he's sort of letting play out over time. But he's making clear what his priorities are through these executive orders, and education, and really, reducing significantly the size and the ability of federal government to affect education is certainly one of his high priorities.
All right, Jody, thank you so much. Appreciate it. Bloomberg Radio and TV political news director Jody Schneider from our D.C. bureau. We should point out that those headlines, that playback, all came out just before, actually, with a fair amount of time before the market closed. And we should point out that stocks pretty much closed near their highs of the session. So in terms of any kind of market reaction, we'll see what tomorrow may bring. But just wanted to point that out. In the meantime, we are continuing to watch shares of Alphabet. They are down about 7% here in the aftermarket. Overall revenue, cloud revenue, missing analyst estimates. Company to spend a lot more on CapEx in 2025 than investors expected, Tim. And unit containing Waymo also falling short on revenue. So
it's
we're
a
getting
tiny
more
unit, and I only went
It
on
is.
one Waymo ride in the last
But
quarter.
you loved it.
And it was about $30. I did not tip the Waymo, by the way. Shares continue to decline in after-hours trading. One of the bright spots, though, in Alphabet's earnings came from YouTube. It delivered ad sales of $10.47 billion. That was up 14% from a year ago. The concern, though, really has to do with fourth quarter cloud revenue. Taking a look at where that landed, $11.96 billion. Estimates were for $12.19 billion.
And just want to point out, shares of Broadcom have been rallying about up 4% here in the aftermarket. Keep in mind that Alphabet is their fourth largest customer, responsible for about 9% of Broadcom's revenue. So again, we're seeing shares of Broadcom pop almost 5% in the aftermarket. Obviously on that news, that headline of Alphabet spending more on CapEx than investors expected. So that is a big deal. And we have some headlines involving Peter Thiel.
Yeah, the Peter Thiel-backed crypto firm Bullish is said to weigh an IPO. It's a crypto asset exchange operator. Backers include Peter Thiel. It's considering an IPO as soon as this year. This, according to people familiar with the matter. The company working with Jefferies on the potential listing, the people said, asking not to be identified because the information is confidential.
All right, so a lot going on here in the aftermarket. All right, we're watching it. We'll bring you any more headlines and certainly out of those analyst calls. In the meantime, we've got a great read on what is going in the world of consumers.
Yeah, let's talk a little bit about payments, because I got to tell you, Carol, not so hard to pay for things in my daily life. Got Venmo. I can send a few bucks to a Bloomberg News colleague who's doing something fun for the Super Bowl. Yeah, if I win.
Nice.
Yeah, I win. I don't know.
Take us all out for pizza.
You got automatic bill pay. You got Apple Pay or Google Wallet on the subway. Online, you can use Apple Pay, Google Wallet, Shopify. If those fail, sometimes you got to pull out your credit card. You got to type in all the info. I don't love to do that.
Hate when that happens.
You still got to do that.
Yep.
One area that I think is still challenging for a lot of people is cross-border. So if my friend comes to the U.S., we go to a concert, hard for him to send me money to pay me back for that ticket. The question, when does that get easier? It's something that Ken Moore thinks a lot about. He's Chief Innovation Officer of MasterCard. He joins us from MasterCard's Tech Hub in Dublin, Ireland. Ken, hearing, as I was preparing for this and we were talking about this, it's not that hard to part with money these days. Companies have made it very easy. But where do you see the big challenges that still remain in 2025?
Well, first of all, Carol, Tim, thank you for having me on the show. And Tim, thank you for really helping prop up the world of payments with all that.
Yeah, it's not so great.
Well, it is. It depends on your perspective. I mean, for us, Tim, it's really like when people think about MasterCard, they sometimes think about us as a cards company. You described us there as a cards company. But actually, whilst that's been a part of our past and will always be a part of our future, it's very important to us. We're actually a lot broader than that today. We really see ourselves as a technology company operating more broadly in commerce. So it's not just the card payment rails we have. We've got rails in blockchain and in fast ACH, and we've got services like cybersecurity and solutions for corporates and SMEs. So really, for me and my role and what I do in MasterCard, it's really about trying to lean into the world of change, right? So we'll come to 2025 in a second, but it's really about trying to anticipate changes in the world of commerce and then building the products and services that are going to help us, and more importantly, the partners and the clients that we have actually thrive in that world.
Well, Ken, something interesting happening right now here in the U.S. is Elon Musk, who has a history in payments with PayPal, and even the company before PayPal, I believe it was called Zip2. And he wants to make X.com, a payment center. Watching what's happening in the federal government, what he's doing at the Department of Government Efficiency, does that change the way you're thinking about the future of payments?
No, I mean, not really, Tim, if I'm honest, because we believe in offering consumers choice. And we honestly believe that payments is evolving anyway. So we probably welcome that more than feel, threatened by it. We've found incredible ways to partner with a diverse set of companies from Apple through to fintechs over the years. And I have no doubt that, and indeed with many crypto companies, so I have no doubt that we will find ways to partner in this one as well. I think for me, if you start looking at, and maybe why is he doing this, it's really the world is starting to move faster and faster. And sometimes when we look at that, we tend to look back and we go, oh my God, it's so much faster today than it was yesterday. But really, we all know change is exponential. It's going to be faster again tomorrow. And if research tells us like by 2040, when we look outside our window, the world is going to be moving 4 times faster. So if you extrapolate back and you bring it to something that's a bit more, reasonable, so 2030, 5 years from now, it's going to be about 1.5 or twice as fast as it is today. And that's an awful lot of change. And that gives us some real kind of challenges, but also some opportunities in payments. And that's really why we wanted to lean in, because our clients don't just buy a product or service from us today. They buy a partner that's willing to invest ahead of them and partner with them to kind of help them realize those changes in the right way, because they know we care about the same things that they care about. And that's going to be true for Elon and his company as well. So that pace of change is really going to accelerate, not just in crypto, but much more broadly across a whole bunch of different of trends.
Hey, Ken, one thing I do want to ask you, and just playing off of Elon Musk, and we've spent a lot of time today and certainly over the last few weeks about his involvement in the U.S. government and access to a lot across various departments. And you do wonder about, what he's learning, what it means to kind of have that inside position. And do you feel like that potentially puts a company like yourself, whether it comes to fintech innovation or payments and so on and so forth, that his initiatives could have an advantage over what you guys might be doing?
No, I have to be honest, we don't really think about that, Carol and Tim. I mean, we trust the elected officials of governments to do the things that are right for them. And we want to partner and we want to respond to them. So we don't, if I'm honest, give too much thought to that just now, because honestly, there's so much going on in payments that there's a lot of opportunity for lots of actors, be they semi-state, be they government, be they fintechs, or be they established kind of players, to actually all have a role in it, because that pace of change is coming at us so fast. And we see it playing out in so many areas, right? We've got a report which we just pushed out in the MasterCard newsroom today, which really talks about 7 trends that we really see playing out between now and the end of the decade. And crypto and others are part of them. So those are part of those trends, as are, the role and the rollout of new payment networks themselves. But really, and that report is freely available for you, for all of your guests, and hopefully you've had a chance to take a sneak preview at it.
Yeah,
but
I saw that cross-border payments was a theme there.
Yeah, it really is. And you've given some great examples already on the call here today, where, the world, we've really been focused on kind of, giving consumers both choice and flexibility, both domestically and that's true of every country around the world. And whilst that's been fantastic, it's also meant that we have some challenges in interoperability. So if you take real-time payments, you take crypto, the example you gave, and the example that you're using in some of your earlier conversations as well, if you take open banking, there's just a lot of different payment rails out there. And also we're moving more than just fiat currency these days, cryptocurrencies, data, identities, there's a whole lot of stuff. So what we really see is that first trend being around moving from this kind of fragmented payment system to much more of a global interoperable system driven by standards and regulatory.
We got to run. Yes. Ken Moore, thank you so much, Chief Innovation Officer over at MasterCard. You are listening and watching Bloomberg Business Week, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Google parent Alphabet posted fourth quarter revenue that missed analysts' expectations as growth in its cloud business slowed. Now sales, excluding partner payouts, were $81.6 billion. Analysts have projected $82.8 billion, according to data compiled by Bloomberg. After hours, Alphabet now trading lower by 7.4%. Brent Thill is an analyst at Jefferies.
YouTube and core search, 1 to 2% ahead, nothing exciting. Cloud was 2% light. And then you have CapEx a little bit higher, 14.28 versus our 14.23. So, again, it was a ho-hum, not super exciting. It should have been more exciting given kind of some of the tailwinds given to Q4.
And after hours, Alphabet down by roughly 7%. Advanced Micro Devices reported disappointing results for its data center division, signaling that it is not making gains on NVIDIA in the market for artificial intelligence computing. Also reporting after the close of trading, we heard from Chipotle Mexican Grill. Its sales rose less than expected, highlighting the high bar the company set with its industry-leading growth in recent years. The Dow, the S&P, and NASDAQ all gained today, with the S&P up 43, ending the Tuesday session at 6,037, up 0.7%, with trade jitters easing. Dow up 134, up 0.3%. The NASDAQ Composite Index up by 1.4%. 10-year 4.51%. The 2-year 4.21%. Gold up $26 the ounce to a record $28.42, up 1%. West Texas Intermediate crude down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Lots of news coming with a lot of earnings. It's not just it's not just Alphabet and Snap, Carol, and AMD. We also got Chipotle Mexican Grill.
Yeah, Charlie breaking down earnings as well. Down about 5%, though, here in the aftermarket. Chipotle, so we are seeing some disappointment by investors. Just looking at our right-through, Chipotle sales rising less than expected, highlighting the high bar that the company set with its industry-leading growth in recent years. We know that over the past year, Brian Niccol, who has been CEO at the company before the pandemic, had really turned the company around after some of its problems in terms of food, and it really was firing on all cylinders. So we did see same-store sales climb 5.4% in the quarter, missing the 5.7% average increase that analysts had estimated. Revenue of $2.8 billion was also just short of the average estimate. So again, shares of Chipotle, as we take a look, down almost 5% in the aftermarket.
Okay, well, let's talk about something a little bit different, because we've heard the 2024 election be called the podcast election. Indeed, both Trump and Harris made their case directly to voters. Trump, obviously, more effectively. The fragmenting of media, though, has been happening for years. A lot has been written about it. Newspaper editors, they're not the ones who call the shots anymore. You've got influential individuals going directly to their audience using social media, podcasts, platforms like Substack, and more. What is a newer phenomenon, though, according to our next guest, is how conservative Silicon Valley billionaires, such as Elon Musk, Peter Thiel, David Sachs, and more, have used media in recent years as influence. Owen Higgins is a journalist, author, and historian. His new book, Owned: How Tech Billionaires on the Right Bought the Loudest Voices on the Left, is out today. He joins us from Windham, Maine. Owen, good to have you with us. Congratulations on the new book. We were talking about this on our editorial call earlier. Carol pointed out that the wealthy and the media, nothing new. Think Jeff Bezos at the Washington Post, and before that, the Graham family, the Murdochs, the Sulzbergers, the list goes on. What is new about the phenomenon that you write about?
Well, thanks for having me, guys. I think that what's new about this phenomenon is these are wealthy individuals within the Silicon Valley sphere who have decided that they would prefer to have a more subservient media. And so they have worked to destabilize institutional media to the benefit of alternative media ecosystems that they control or that they at least have some investment in. I don't mean to make this sound conspiratorial or as if there's some kind of cabal all kind of planning this together. Silicon Valley's theory has often been to move fast and break things. And I think that's kind of what they've tried to do here with independent and alternative media. And what it's had this knock-on effect, a positive effect, I think, from their perspective of damaging and deteriorating these more institutional mainstream and critical independent media institutions to the benefit of an alternative media ecosystem that, as I said, is more subservient, or at least will put forward the kind of ideological points of view that they want and not challenge them in the ways that they would not like to be challenged.
You know, Owen, Elon Musk, Peter Thiel, they're in your book. You mentioned them, but there's two names that for some might not be as familiar, and that is Matt Taibbi and Glenn Greenwald. They are featured prominently in the book. Remind folks who they are and why they are front and center. And I remember Matt Taibbi, certainly a lot of reporting here in New York City many, many years ago, but why are they front and center for you?
Well, Glenn and Matt are kind of the way that the book explores this phenomenon primarily. And the reason that they are why I selected them is because these guys were nominally on the left, or at least allied with the left, for a long time. And they have moved to the right in kind of tandem with them working with these alternative media companies that have been invested in and supported by these Silicon Valley billionaires. So I thought that it would be a good way to explore that shift to pick these two guys. And of course, I didn't just pick two random left-wing or left-aligned journalists. These are pretty prominent individuals. Glenn Greenwald was the journalist who Edward Snowden contacted when he first wanted to reveal what the NSA spying scandal. And Matt Taibbi has long been a prominent writer, specifically, really, I think, that the peak was when he wrote about the financial crisis for Rolling Stone. So these are kind of not nobodies. They are pretty well known, and you know, if you're familiar with the kind of the last 20 years, I suppose, of kind of alternative media, or at least like left-wing aligned media, I think that these would be two names you'd be pretty familiar with.
So enter Substack, because that's something that has emerged in recent years. Interestingly enough, sort of the origins of Substack are interesting because you got a guy who years ago worked at Tesla, many years ago, and then left Tesla and goes on to be one of the guys who launches Substack a few years later. Talk about Substack a little bit and how Substack is featured in here, because there are a lot of journalists on the left also who use Substack as a way to get out to their audience.
Absolutely. I mean, I use Substack. Many of my peers use Substack. I think Substack kind of came about as a newsletter service with a really good user interface, I think is the way that I would describe it. They filled a gap that was there. There were other blogging sites. I don't want to bore your audience too much, but one of them was called Medium. That's kind of the one whose user interface I kind of compare to Substack the most. Very easy to use, looked really nice on the page, not very complicated. Substack took this kind of model and exported it to the newsletter service, where they gave you this easy user interface. And if you were a writer, all you kind of had to do was fill out a couple of forms, so to speak, on the website, and that they would pretty much do everything else for you. And they would take a fee, obviously, from your newsletter subscriptions. But if you didn't want to charge subscriptions, you could just host it on there for free. Substack came to prominence, I think, after Mark Andreessen, venture capitalist in Silicon Valley, invested in it in, I believe, 2019. He led a funding round, Andreessen Horowitz, his company. And after that, Substack had capital to burn. They had capital to spend on other writers. They had capital to spend on trying to get people to come over to Substack from existing institutional media. And if you kind of think back to what I was saying before, right? Like they wanted to kind of damage institutional media and to kind of shake the foundations, I think, of the mainstream and critical independent media. Well, I mean, one way you can do that is to invest in this company and to kind of see if they can take some of the more prominent writers from those organizations and bring them over to a place where they're independent, sure, and they do a lot of good work, sure, for a lot of them, but they're also kind of, it's a little decentralized, and I think that was kind of the point of it. Now, Substack kind of started to tilt right, or at least there was a perception that it was tilting right with who it was courting, And it did it for both Matt Taibbi and Glenn Greenwald, again, the two journalists who I use as the primary kind of way to explain these phenomenons. They allowed both of them to leave, Matt to leave Rolling Stone and Glenn to leave The Intercept and to come on to Substack and strike it out by themselves.
Hey, I do want to make sure we get some news from the Bloomberg terminal that we're seeing right now. A couple headlines crossing right now. Match has named Zillow co-founder Spencer Raskoff as its CEO, replacing Kim as the CEO. Some more details available on the terminal.
Yeah.
Its new CEO, Bernard Kim, who has struggled to end a persistent decline in subscribers to the company's flagship dating app, Tinder.
Yeah, we should point out Raskoff joined Match's board last year. Right now, we've got Match shares, though, down about 8.2% here in the aftermarket, so seeing some pressure. We're talking with Owen Higgins, journalist, author, and historian. His book, Owned, How Tech Billionaires on the Right Bought the Loudest Voices on the Left. Owen, why are you writing this?
Lost you there for a second.
That's okay. Owen, can you hear us?
I can hear you, yep.
Oh, cool. Why did you write this book? Like, I'm thinking about the Bloomberg audience, a smart audience, an informed audience, an investment audience. And, we have certainly seen journalism in general change dramatically just over the last 10, 20 years, and for a lot of different factors, I guess you could say. But why write this book?
Yeah, I've written some things that have been, or over the years, I've written things that were critical of Greenwald and Taibbi's shifts to the right. Mm-hmm. So both type books reached out to me to ask me to kind of write about how they shifted to the right. And I said, I want to do that, but I would want to kind of merge it with this discussion of how media and how tech billionaires, specifically like these Silicon Valley conservatives, have exerted their influence over the media, because I find that to be a really interesting story. I've written about it multiple times for years. And so I think that I was eager to explore that the Silicon Valley angle. And as I started to write it, I wrote it primarily between I'd say September 2023 and February 2024, and then went through the editing process. And obviously through the editing process, as Trump rose, his political fortunes rose again, and you saw people like Elon Musk and Peter Thiel kind of align themselves with him. It only became more relevant, and I think that the tech side of it really started to take over the narrative a lot more than the kind of the media. I don't want to say gossip, but the kind of like the media minutia of the story, and it kind of became more about tech. And I think, I write about tech for my day job. I write about IT. I don't write about so much the business of tech, but I write about IT. So, I'm very interested in this world, and I think that the politics of Silicon Valley tech titans, these billionaires, are I think that's very important. We saw the Palantir earnings report that came out, that note from Alex Karp, saying a lot of these kind of similar things to what his fellow tech leaders in Silicon Valley are saying. This kind of sense of ideology is kind of taking over a little bit, how they are presenting their earnings, how they're presenting their company to the public. So I think for the Bloomberg audience, I think that kind of is a way of examining the people behind these companies that you follow, and looking at how they both kind of exist in this world together, and this like buying this kind of media influence and pushing for how they get their message across, and also like what that message is now as they kind of go further to the right. We're speaking
with Owen Higgins. He's the author of the new book, Owned, How Tech Billionaires on the Right Bought the Loudest Voices on the Left. The book is out today. Owen, money certainly features prominently in the book. You talked about the billionaire backers. There's obviously X and what Elon Musk has done at the company formerly known as Twitter. Back to, though, Matt Taibbi and Glenn Greenwald. I'm curious about money as a motivation here. One thing that Substack has allowed is for essentially the ceiling on being paid for work to be limitless. Did you, in your investigation, in your reporting, get any idea of how much money individuals like those are able to make with their Substacks?
I've seen numbers thrown around. I mean, all of this stuff is is private, but you can kind of get a sense. Probably somewhere between like $500,000 and $1 million a year through Substack, I think, for Taibbi. And now Glenn has moved off of Substack. He has moved to Rumble. So just to get a little background on how that happened. So Teal and JD Vance led a funding round for Rumble in May 2021. This was about 6 months after Glenn left The Intercept. And then in August 2021, Rumble began to give paid deals out to people. So I think in August, some of the first people were, I think in the same day were announced, Glenn Greenwald and Tulsi Gabbard, right? So these were kind of the two most prominent names. So Glenn now has moved all of his writing from Substack over to Locals, which is Rumble's blogging platform. So I don't know how much he makes from that. I don't know the structure of his deal. I don't know. I would assume though it seems to be a multi-year deal, so it's probably pretty good. I would assume that he was making, even if we assume he was making equal to what Matt was making from Substack, he would have that they would pay him about that or more. So
Owen,
I would say that's about.
I want to make sure we only have a few more minutes. So I want to make sure we get in as much as we can. What would you say to someone who's listening or watching right now who says, wait a second, we need this on the right as an antidote to what's happened on the left with the rise of the media being associated with the left? There are a lot of people out there who would say the media is liberal, so there needs to be sort of an antidote there. How would you respond?
Yeah, I mean, assuming that I would agree with that, or at least like not contest it, that the media is liberal or on the left, I would say that I don't have a problem with conservative media existing. I think that's fine. I think that there's a place for any kind of discourse, I think there's a place for right and left discourse in a democracy, certainly. What I'm trying to bring attention to here is the kind of decentralization of media and what that means for professional ethics and how newsrooms are run or not run in the case of people who strike off on their own. Again, this is fine. Most of my career, I've been a freelance journalist. I've been independent. I'm certainly not.
I think, Owen, I want to jump in on that because we've only got a couple of minutes left here. I think that is an interesting point. I think a bunch of us have grown up in a world of journalism where there were layers over us and we wrote something and there were editors. And I mean, I can't tell you how many times I would have like a 2-minute piece that went on TV and how many people looked at it and rewrote it and you were questioned. And I do wonder about the layers. And so the idea of something being news and factually checked multiple times versus just someone putting something out, there are distinctions to be had in an environment when news was very clear what news was, and now news is used to denote a wide range of different things, whether it's on social media or in kind of traditional linear broadcast or even in print.
Yeah, I agree with you, and I think that the industry right now is kind of going through growing pains, if that's the appropriate way to put it, where you have a lot of independent people kind of doing their own thing, and some are not doing with all of those layers, and they're not and they're not succeeding, right? But some people are succeeding. They are managing to do good reporting. They are managing to do good, opinion punditry, etc. So but I think that the decentralization of media, which again I don't think is necessarily like a bad thing on the face of it.
Yeah.
But I think that all of that is kind of leading, all of it's kind of moving together to change the way that media has worked. Now, personally, having worked in both, like I prefer having the layers of control. I like having like hard fact check, hard copy edit. Absolutely.
Got it.
So I think that there's just I think media is changing, and I think that a lot of times especially when it comes to print, right?
Owen,
it's kind of hard to know like where we're going with it.
Owen, we got to run. We got to run. Owen Higgins, his new book, Owned: How Tech Billionaires on the Right Bought the Loudest Voices on the Left. Hey, folks, just a few seconds left. I just want to squeeze in terms of we are still seeing shares of Alphabet down about 7% here in the aftermarket. Again, some disappointment in terms of the revenue line and in particular cloud, and we are continuing to track that call with analyst Sundar Pichai saying Google's investments in podcasts is paying off, and that YouTube is now the most frequently used service for consuming podcasts in the United States. That according to a recent Edison report. Match, meantime, down about 8%. We've also seen some other names moving big time in the aftermarket.
Yeah, Snap higher at last check. This is Bloomberg Business Week. Balance of Power starts right now.
To our TV and radio audiences worldwide, welcome to a special edition of Balance of Power as we prepare to bring you straight to the Oval Office right now. A slightly different start for us here on Bloomberg. I'm Joe Matthew alongside Kaylee Lyons. Donald Trump is meeting with Prime Minister Benjamin Netanyahu as we speak in the Oval Office ahead of their news conference that will come a bit later. Let's listen live for a moment on Bloomberg.
I think that I should talk to President Trump.
So
okay.
I'll ask, do you agree with Trump's vision of getting all the hostages back home, even if it means to end the war?
Well, I'm not sure that you articulate correctly what the president's vision is. You can ask, he can speak for himself. He does that very, very well. I have my own views, 3 goals, not 1, not 2, 3 goals, and I will meet all 3 goals. I think the president can help enormously. He brings fresh thinking.
Any address to the fact that terrorists who murdered hundreds of people were listed their home as the part of the deal?
It's a horrible thing. We can't forget it. I'll never forget it, and you can't forget it. And some people want to put it out of their memory, but we're not going to ever let that happen. It was a horrible day, October 7th. That was a horrible period of time. And a lot of people like to pretend it didn't happen. It happened. There's a big group of people that like to pretend it didn't happen, like the Holocaust didn't happen. Same mindset. And no, we're going to get this thing wrapped up, and we're going to get it done. We're also dealing, I think, very successfully with Russia, Ukraine. We're going to hopefully get that one done at some point in the not-too-distant future. That's a complex problem also. But we solve problems. When I left, we had no problem. There was no Ukraine and Russia fighting. There was no October 7th. There was nothing. And some very poor leadership led to a lot of problems and a lot of death. And it's a shame, but we'll put it out. We'll put out the fires. We have a lot of fires, but we'll put them out.
Mr. President, why do you still support a Palestinian state like the peace plan you presented in January 2020? Is this plan still on the table?
Well, a lot of plans change with time, and a lot of death has occurred since I left and now came back. This death occurred not while I was here, but while somebody else was here. It shouldn't have happened. They shouldn't have allowed it to happen. It would have never happened, and that includes Russia, Ukraine would have never happened. Not even a little bit, not even a chance. But now we are faced with a situation that's different, in some ways better and in some ways worse. But we're faced with a very complex and difficult situation, but we'll solve the problem.
Mr. President, refugees get from Gaza, out of Gaza? If not Jordan, Egypt, what other countries you think might accept Palestinians from Gaza?
Well, I think Jordan and Egypt will. I know they've spoken about it with you, and they say they're not going to accept. I say they will. But I think other countries will accept also. I think that Gaza maybe is a demolition site right now. If you look at Gaza, there's hardly a building standing, and the ones that are going to collapse. You can't live in Gaza right now, and I think we need another location. I think it should be a location that's going to make people happy. You look over the decades, it's all death in Gaza. This has been happening for years. It's all death. If we can get a beautiful area to resettle people permanently in nice homes and where they can be happy and not be shot, not be killed, not be knifed to death like what's happening in Gaza. And right now you have in Gaza a very dangerous situation in terms of explosives all over the place, in terms of tunnels that nobody knows who's in the tunnel. The whole thing is a mess. And I think that if we can resettle, and I believe we can do it in areas where the leaders currently say no. I mean, I've been saying that with Mexico, having to do with the border and all of the things, and you saw what happened, 10,000 soldiers, and they're going to do a good job. I really believe that, and I believe Canada is going to do a good job also. They said the same thing, and then they did something much different than what you were hearing. This is a very, very difficult situation, but we're going to get it solved. I don't think people should be going back to Gaza. I think that Gaza has been very unlucky for them. They've lived like hell. They lived like you're living in hell. Gaza is not a place for people to be living. And the only reason they want to go back, and I believe this strongly, is because they have no alternative. What's the alternative? Go where? There's no other alternative. If they had an alternative, they'd much rather not go back to Gaza and live in a beautiful alternative that's safe.
It's President Trump live. In fact, a short time ago, live to tape, as they say, in the Oval Office with Benjamin Netanyahu. If you're with us on Bloomberg TV or on YouTube, you see the two sitting in front of the fireplace in the iconic setting in the Oval Office. They will soon be holding a joint news conference, a bilateral news conference that we will bring you here on Bloomberg TV and radio following their first meeting since Donald Trump was elected took office in the White House. In fact, the first visit of a foreign leader in the new Trump administration. I'm Joe Matthew alongside Kaylee Lines in Washington. As we bring you continuing coverage from Washington, D.C., we bring in Republican Congressman Chuck Fleischmann of Tennessee. Congressman, it's good to have you with us. As we listen to the outcome of this meeting and the news conference that will follow, it reminds us, of course, of the very delicate situation that we have right now in the Middle East. Donald Trump had some very tough words earlier today for Iran, for instance, with reporting today that there's a secret team in Iran working on developing a more quick arrival at an atomic weapon. And this is something that has the attention of our intelligence community here now. We often talk to you about the energy space. How precarious is this moment for the price of oil and gas as Donald Trump meets with Benjamin Netanyahu?
Well, first of all, let me commend President Trump and Prime Minister Netanyahu for a very productive meeting, for very positive rhetoric, and it shows the strong, resilient, growing, and eternal bond between the United States and our strong ally Israel in the Middle East. In terms of energy prices, obviously it's about supply, supply, supply. We need abundant oil. We need abundant natural gas. I occupy the nuclear space. I think we need big nuclear and small nuclear going forward. Chris Wright, our new energy secretary, I think is going to do a very great job in that regard. But I think all of the indicators, and again, I applaud President Trump for this, are ramping up supply, at the same time dealing with situations in a very dangerous world. In terms of Iran, let me be very, very clear. As you know, as chairman of the Energy and Water Subcommittee of Appropriations, I fund our nation's nuclear arsenal under the NNSA, the National Nuclear Security Administration. I'm responsible for funding that. We have got to make sure that the Iranians are never able to develop and deploy the use of a tactical nuclear weapon of any kind. I think Donald Trump has been steadfast about that. I'm steadfast about that. So the reality is where we've got somebody new in charge, President Trump, who is very cognizant, very aware, and watching all of this. So a lot of moving parts. I give him very high marks. And I also want to thank Prime Minister Netanyahu for coming to America at a critical time and being the first foreign visit.
Well, Congressman, I'd like to ask you about something else that does seem it's going to be impacting American energy, and that's the retaliatory tariffs that China has announced in response to the 10% levies that Donald Trump, as of midnight, has placed on all Chinese goods. When we consider that response from China, the idea that this could potentially ramp up even further, is this something that benefits the 3rd District in Tennessee? Is this not just going to lead to higher prices for consumers and potentially damage American energy?
Well, again, I want to commend President Trump. For too long, China has taken advantage of its position in the energy sector. Let's take a look at solar. They go in and they flood the market with chips that basically drive out American competition. They basically dump. They use their powerful position and their control to basically chase everyone else out of the market, whether it's solar or other types. They're moving ahead in nuclear as well, including new nuclear. So at some point in time, and now is the time, President Trump is going to stand up to China. I think ultimately Xi will understand that President Trump is for America, Xi is for China, and there's going to have to be a change in the relationship. It can no longer continue to be this one-way dominance by China, not only against the United States, but against the rest of the world. So America is standing up. Short-term, possibly have some issues. Long-term gain, getting American dominance in energy and all of our other sectors back strong and secure.
Of course, the door swings both ways, Congressman. On Bloomberg Surveillance this morning, we heard from Sarah Bianchi, the Chief Strategist, Political Affairs, Public Policy at Evercore ISI, former Deputy U.S. Trade Representative, had this to say about China's response to the retaliatory tariffs. Listen.
Beijing did, need to look strong in responding back, although it is a measured response. That one could go on for a while. There's a lot of complexity in that relationship and a lot of things to work out. I do expect this year we're going to see higher tariffs on China that are lasting. I expect the administration to go back to its initial 301 investigation. I expect there to be a lot to say on export controls. So maybe he pulls back briefly, but I think it's much more likely these ones stay in place.
So, Congressman, this is a trade war to stay, it sounds like. What does it mean for manufacturers in your state?
Well, I think it means manufacturers in our state are going to be attracting more manufacturing to our state and to our country. Let me be specific. Volkswagen, which is actually in my district, is now wooing Audi and some of their other brands to look at manufacturing in the United States. I think it's going to be a period of readjustment, but a period where I ultimately think the Chinese will realize that America is no longer going to take the disadvantageous, overwhelming relationship that has been in China's favor. And what's going to happen, I think, China will realize at some point in time, they, like Mexico and other countries, will come to the table and renegotiate with the United States because it will benefit them to do that in the short run and long run. This is a tactical move by Trump. I think he's been successful again with Mexico. He's been successful with Canada. I have no reason to believe that ultimately he'll not be successful with China.
Congressman, I'd like to ask you about something else that has made a lot of headlines in the last few days, and that is the access that Elon Musk and the Department of Government Efficiency have been granted to Treasury payment systems. Elon Musk obviously, has a role in some sense as a government employee here. He has not been confirmed by the Senate. It's unclear what his security clearance status actually is. Should he be having access to the sensitive financial data of millions of Americans?
As a constitutionalist, I want to stay in my lane. I have oversight power as an appropriator in the United States House, and I do use that.
But what would you say if a constituent asked you why Elon Musk got to see their social security number?
I would basically say at this point in time, we have to wait and see what exactly has been seen, but this is the purview of the executive branch. This is something that Congress can inquire, but once again, Treasury and the Treasury Secretary, I think, has actually addressed this in a very meaningful way. We are going to find out exactly what has gone on, but ultimately, this is the call of the executive branch and not the legislative or judicial branch.
Well, it will be under your purview, I suspect, if the administration, by direction of Elon Musk, wants to rid the nation of certain government agencies. If Donald Trump, for instance, wants to shutter the Department of Education, doesn't Congress need to have a say in that?
Absolutely. I think Congress and the United States House and the United States Senate do have a role. The executive branch has a role. And ultimately, maybe even the courts will have a role to look at what the balance of power is. I think that's a good, healthy debate for our republic, for our balance of powers. And basically what we've seen over the years is a growth in these federal agencies, whether it's the Department of Education or other federal agencies, beyond the bounds of what I think even Congress wanted. Now, the Chevron decision, which the Supreme Court weighed in, is going to give much more authority, I think, to the legislative branch, where actually I think it belongs. Ultimately, that will take time to get that power back. But it's not one size fits all. It is a process. It is a constitutional process, and we will work it out for the American people. And as you alluded to it earlier, our constituents will be heard on all sides of this aisle and ultimately at the ballot box. So we will be responsive in the House. Our senators will. And, of course, I think the executive branch will on a broad scale.
All right, Republican Congressman Chuck Fleischmann of Tennessee, thank you for joining us this evening. And coming up, we'll get the perspective from a colleague of his across the aisle, Democratic Congressman Richard Neal of Massachusetts, ranking member of the House Ways and Means Committee, joins next on Balance of Power on Bloomberg TV and radio.
The United States